businesses, go after them and continue to pursue them. So that's what the Cole memo said. So what Sessions did, he said, you know what, we don't need the Cole memo. Yes, there are limited DOJ resources, but we don't need the Cole memo. I'm going to rescind it. And what that basically means is he took out that guidance to local U.S. attorneys. So what that leaves the local U.S. attorney is what's called the U.S. Attorney Manual. It's been out there for years. It's been developed and refined for years and years and years. And this is a prosecutorial manual for U.S. attorneys telling them who to go after and who to leave alone. When to bring charges, when to try to indict somebody, and when not. And there's been at least 12 U.S. attorneys since rescission of the Cole memo who have come out and said, we're going to follow the U.S. Attorney Manual. The U.S. Attorney Manual already points us toward not going after businesses that are operating in compliance with state law and not doing these bad boy acts. So our opinion is that the Cole memo and rescinding the Cole memo is not going to have any kind of significant effect on the industry because the local U.S. attorneys already have this U.S. Attorney Manual directing them on what to do, and the priorities are essentially the same.
So Benito, I mean, we still have it legal on some state levels. There's still some level of illegality on the federal level. So from your perspective, when you're valuing businesses, how do you value that? How do you make that risk into the value of the company?
It's interesting because I look at business valuation as if something changes, like what Sessions did, rescinding the Cole memo. When that happens, all else equal, you know the term ceteris paribus, all else equal, when Sessions does something that scares the industry, the values go down. And then when people realize that it really did make that change because the Blumenauer Act is still there, it levels back up again. So there are shocks, like we've heard of shocks in the industry. Every time a government or a law is changed or a stupid tax is added so that now you pay $1.29 on wet flour instead of the $9.25 you already paid on dry flour, the industry looks at that and says, oh, that's worrisome, that's more risky. You guys are in real estate, you know that as risk goes up, the value goes down. That's what's happening. And that's why you see, you can watch the publicly traded companies in the cannabis customers. They fluctuate like crazy. The values go up and down and up and down. And it's because a new pronouncement comes out, a new company folds. And all of that just ripples through the industry. So that's what happens. And that's why you see so much turmoil in this industry in terms of valuation. When value, you see that clearly in the publicly traded company area, but when you're talking about private companies don't react to stocks like that on a day-by-day basis. The value of a business or the value of real estate doesn't fluctuate like that on a day-by-day basis. It will still trend. It may trend up or down, and I think that's what it is. Like the increase in real estate values as the zones where you could have cannabis businesses, where those zones were outlined, the green zones, the value of that real estate, ceteris paribus, all other things equal, the value of that real estate went up. I was telling somebody here earlier, if you have a piece of property that's clearly in the green zone, your value went up. If you have a corner of your property sticking out of the green zone, you probably want to cut it off and sell it separately so that you're all inside. Because from what I understand, if you have a corner sticking out of the green zone, you don't get to qualify as being in the green zone.
So a cannabis company versus another kind of like manufacturing company or agricultural company, what's the impact of the federal when you're valuing two companies that are somewhat similar, but one's dealing with an industry that has to be federally regulated?
Well, if it's federally illegal, it's obviously more risky. So the way we value businesses of any kind, we look at their risk profile. And we do what's called discounted cash flow method. And in real estate, we do something very similar. And you forecast out the revenue and the profit expenses and profit, and then you discount that forecasted profit because of value. The discount rate, as it goes up, as it's more risky, as it becomes, or as it becomes more legal. In California, recreational is now legal. So the risk profile has gone down, so those business values have gone up. So that's how it's impacted.
So Jason, you're looking at a potential opportunity. I mean, you do a lot of traditional kind of real estate as well as this. What's the factor you put on this thing because of this extra layer of risk? I need to achieve this level of return. What's kind of the factor for you? How does this impact your decisions?
I'm not in this personally for return. I'm all in this business. So I'm building a platform which has multiple components to it. And I'm in this for 10, 15, 20 years. So I'm not looking at it from purely a return perspective. My investors, so if you bring in money, we have two sets of investors that come into our deals. Number one, we own real estate, so we have people that take real estate risk. Those real estate deals, these industrial warehouses that we own, they're unleveraged, no debt on them. You can't get traditional debt. You can only get hard money loans on these. And hard money loans in cannabis do not carry risk. Too much uncertainty on the revenue side of these businesses. So they're all cash. And then you've got to build these facilities out. It costs just as much money, if not twice as much money, to build them out than it does to cost the real estate, to buy the real estate itself. You're literally not basically building a building within a building. And it's having to building that whole facility, clean rooms and heavy electricity and power. And again, there's no financing, no equipment financing, pay 15, 20%. Consequently, we actually lend money as well separately against people in cannabis for real estate. We charge 15%. So back to valuation returns. So our investors in our cannabis deals in the real estate side typically, I typically try to get to them a 15% unlevered rate of return. So or 15% unlevered return, which is a 15 cap rate, 15% cap rate. They're taking the risk for it, right? This is real estate. It is very quick. It seized. It could be the tenant could go out of business tomorrow. That tenant is me. I'm not shy about telling people this. We can get shut down tomorrow. The value of real estate could go down. So it's a 15% unlevered return on the real estate. And then on the business side of things, that's a whole different conversation story. I try to provide a set of projections to investors that has integrity to them. At the end of the day, I've been in this business 2 years. I'm considered a dinosaur in the industry, but I still don't know what the heck I'm doing. And we're figuring it out every day. There's not a day that doesn't go by that something's not for us. Protocol for us. So it's hard for me to answer what the returns are. If you're investing on an operating company like mine in this industry, first of all, careful who you invest with. Second of all, make sure the returns of the deal because people can pie in the sky valuations. One thing I just want to add, David, you mentioned something about federal. You kind of downplayed a little bit federal illegality. Cannabis is a federal crime. In fact, it's a Schedule I narcotic. It's treated on the same level playing field as heroin. This is an age-old war on drugs. This goes back to the old Nixon era. Tough on drugs and tough on crime drug laws. They're arcane. I mean, there's no reason cannabis should consider this, but this is federally illegal with no gray area whatsoever. In terms of volatility, I mean, this is doesn't get a lot.
And one thing that I just want to touch on, what you talked about, is the risk level and the structure of an actual investment in itself, and the pie in the sky type valuations and things like that. There's even though it's becoming legal as a new opportunity, there's a lot of new people that seem to be getting into the industry. I've seen investments that people bring to me, and in reality, when you're looking at these investments, they're not structured right for a syndication. They're not structured right from an investor perspective. There's a lot of issues from a non-experienced syndicator or operator that is going into this industry. One of the reasons, I think I've invested with you a few times, Jason, but one of the reasons why is because he has the experience, and whenever you're actually dealing with an operator, having someone that understands the experience from a real estate perspective, from a perspective of raising capital and protecting investors, and decreasing your numbers to kind of show that risk tolerance level. Like one of the things that I really liked
about his structure was, on one of the projections, you had a declining cash flow model where, where the revenue streams and the profits declined as there was more supply coming into the industry. And that's a hard thing to gauge, to be able to put something like that in place. But showing there's forward-looking financials in place for something like that is something you should be looking at as an investor if you're looking at investing in these types of opportunities. And if you're looking at raising capital for a deal like this, understand it should be structured in the right way where there's preferred returns for investors, just like any deal that you're going to invest in. So that type of mentality is very, very key when you're investing, in my opinion. But and then there's also the risk, like you mentioned, with regard to the banking issues and not being able to get financing. And so, Kenneth, from your perspective, because you're dealing with the money side of things and everything, how does this federal illegality play into the money aspect, and what are the limitations due to that illegality, and how are people getting around some of those issues?
Great question. So first and foremost, cannabis is a Schedule I drug. So any bank that touches cannabis funds can be prosecuted for money laundering because it is an illegal substance on the federal level. Now, we have so many cannabis being legal medicinally in so many states. Banks went to FinCEN, Financial Crimes Enforcement Unit of the Department of Treasury, and they said, what do we do? How do we bank this industry in a state where it's legal? And FinCEN issued their guidelines to financial institutions to say, if you do this, this, and this, you can bank the industry. And I can go through those real briefly so you understand when you're making an investment, what is the bank thinking about? Well, first and foremost, the bank has something called a Know Your Customer Due Diligence requirement under the Bank Secrecy Act. So the bank needs to know their customers and their operations and what they're doing. So FinCEN said, if you're banking a cannabis business, in order to satisfy your Know Your Customer Due Diligence requirements, you've got to do a couple of things. One, guess what? You got to make sure they're operating in compliance with state law. Okay? Number two, you've got to make sure that they're not implicating any of the 8 enforcement priorities now in the now rescinded coal memo. Number three, with respect to any illegal activity, the bank suspects that money is coming into the bank from an illegal activity. They have to file something called a Suspicious Activity Report, or SAR. However, the banks FinCEN, I should say, realized that if the banks had to file a normal SAR, Suspicious Activity Report, with respect to every cannabis deposit, then FinCEN would be inundated with SARs, and they wouldn't be able to separate the real SARs, where someone's really money laundering or arms dealing, etc., from just the marijuana SARs, where it's limited to a state legal business that's not implicated in the enforcement priorities of coal memo. So FinCEN instructed banks, if you're going to file a SAR with respect to marijuana, we want you to do one of 3 things. If it's a normal marijuana activity, we want you to write marijuana limited at the top of the SAR form. So FinCEN sees that it's a marijuana limited SAR means it's garden variety marijuana money. Then you know your customer due diligence. They're not implicating any of the enforcement priorities, and everything's kosher. Now, I suspect something's a little bit wrong with that business. Maybe they've been violated, had some violations of state law. We want you to write marijuana priority at the top of the SAR form. And FinCEN will realize that, yes, something's a little askew with this particular client that the bank is banking. And if you suspect that the bank is the cannabis business has gone completely off the rails, we want you to write marijuana termination at the top of the SAR form. And so this way, and that means that basically you terminated that client, the bank terminated that client, and something's really wrong, and figured DOJ or the FBI or DEA is going to come knocking on the door in a couple of months of that marijuana business because their accounts have been terminated with a marijuana termination SAR. So those are the 3 types of SARs, and that's what FinCEN told banks to do when banking this industry in. We file the marijuana limited, marijuana priority, and you can file some marijuana termination SARs with respect to the cannabis businesses that have been offline.
What gives you the indication from one classification to another? How are you seeing what those classifications are?
There's a couple different things. If the marijuana business, we suspect they're shipping marijuana across state lines. I'll give you one example. We had a client who, we pick up their cash with PayQuick, and they keep the money in the banking account. They also had a bank account that we had gotten for them with one of our partner banks. And we realized they weren't taking the money out of their banking account. They weren't letting it sit there. And we talked to the bank, and the bank, they weren't withdrawing the money from their bank account either. But every month, they were selling $500,000 worth of cannabis. Well, what money are they using to buy that inventory? Right? If they're just letting their cash sit at the bank, and they're not, and they're obviously selling marijuana on the black market, using that cash to buy new inventory, sell that, and put the money in their bank account or in the bank account. So that led to the filing of the termination side. And
well, yeah, well, if you have a follow-up question, I have another question. I've got a question on the valuation side. So I understand in Colorado that the price of the grow declined over time, and the price per pound or whatever it is, has been dramatically lower. So from a valuation perspective for California, I don't know if you have anything in mind as far as like what do you consider to be a fair model price decline, let's say for the next 5 years. I don't know if everybody in the room understands what that is. It's very important from an investor perspective.
We're doing a check on Jason's numbers here right now.
I love it.
The price per pound has gone down and is predicted to go down. I think that I'm bringing this a little bit, but I think 2-3 years ago it was $2,500 a pound to teleport, and it mattered a lot whether it was indoor grow, outdoor grow, or mixed light, which is greenhouse taking production. And there's that distinction in that what you get selling marijuana per pound. And over time, it's gone down a lot. As we have more and more big grows, in California, there are going to be very big grows. They can be very, very efficient. Their cost to grow will decline. And since their cost to grow declines, they can sell at a lower price point and still make profit. And then what we're seeing is bigger and bigger growth. There will always be some very small, high quality, high perceived trade name cannabis, and those might maintain a higher sale price and they'll make a higher profit margin. But absolutely, it's going to trend down. It has been trending down.
So if you were going to model out a business right now and you were trying to figure out the future value, what price per pound would you put on it going, like California maybe going down to at some point? In other words, maybe stabilizing.
There are resources for getting forecasted of price per pound. So we work with the clients to determine what their cost to grow is. If they can model their cost. And then we estimate what markup they would have to sell it at, and then we look at the forecast of price per pound. So they'll either be more or less profitable if their cost to grow is lower, right? And you get a bigger margin on the differential between what they can sell it for and their cost.
Okay.
And that's just revenue. Then you're forecasting the operating expenses, the taxes, that if they're paying 280 taxes, their taxes are on their gross profit. So you have to model all of it.
Okay, but you personally don't have an opinion on like where the price per pound may end up in your finances?
I'd be a billionaire.
Okay. I assumed in the valuation business that it factored in like if you're hired to value a business for somebody, I assume maybe you had a concept of what you would plug, but it's not like that.
It's not like that because it fluctuates so much. It fluctuates seasonally.
It's a model. It's flower.
Yeah.
Just anecdotally, in Q4 of 2017, the price per pound, the average price per pound, is factoring in outdoor garbage growing in Pueblo, Colorado, greenhouse, indoor. The average price was about $1,650 a pound. I forget where it was in 2014, but it was low at $2,000 a pound. Also, anecdotally, demand, you're gonna hit $2 billion in revenue, $2 billion in gross sales in the state of Colorado this year. 5.5 million people in the state of Colorado. Extrapolate that number over the population of America. This is a $100 billion industry. It's a $100 billion industry, and people maybe a little less, exaggerating moderately, but that's $100 billion of people spending money on cannabis-related products today before you have legalization. 90+% of that is being satisfied by the lack of great market. This industry, like I'm negative because I'm in the fight every day, but this is a real industry. And the ancillary services, the people that are in it, banking, financial services, accountants, CPAs, lawyers, growers, real estate, I mean, branding, marketing agencies. This is a real industry that's here today, and it's only going to get stronger. And $100 billion is, frankly, in my opinion, before you factor in big pharma getting it. Because once big pharma starts to investigate the plant and the effects the plant has truly on health, who knows what it's.
They already know. They know already. Right? I mean, so.
Well, the federal government has patents on medical uses of cannabis. It boggles my mind how they can say that it should be that it's a Schedule I drug just as bad as heroin, and yet they have a patent on the medical uses of cannabis. And it's
When did they file that patent?
2004, right? 2003. And
So it's almost done.
it is. And there are companies out there who are nibbling around the edges of the patents. So they're getting their own patents. They're close to what's protected under the federal government patent. And they're just ready to come in with their own patent applications, or they've already applied for patents on products that are similar. We've talked about supply, we've talked about prices, we haven't really talked about demand. And I have a personal opinion about where the demand is going to come from. I don't think you're going to get people like me who don't like to smoke. You're not going to get me to smoke pot. And there are lots of people like me. But where the demand, I think, is going to come from more and more is that as our population ages, we have more aches and pains. People have epilepsy. People have cancer. People have pain. Cannabis works. And I'm not selling this stuff, but I've seen it myself personally with my family members. It stops epileptic seizures. For my son, nothing has ever stopped him. He's had this since he was 17, and nothing has stopped him. He's been using this now for 2 months. He just started. No seizures in 2 months.
That's amazing.
I mean, it's all you have to do is go online and look at some of the video of children like Charlotte FIBI. Charlotte's Web was developed and named after Charlotte FIBI, had Dravet syndrome, intractable seizures, and she gets Charlotte's Web. And I don't think it stopped them completely, but she can have a life. She looks like a nice little girl instead of something that how you can imagine how she could live. So for me, from my standpoint, the demand is going to come in very large part from more and more people recognizing the medical benefits.
That's not even including all the auxiliary products that get developed out of this, the lotions and creams and everything else you can possibly think of. We talked about this a little bit beforehand. It has fuel implications, and clothing implications, and building implications. I've read articles saying that it's better building material than wood, and it grows way faster than trees grow, and things like that. So it's really interesting, all the different things. And like you said, Jason, about the auxiliary businesses and things like that. From what was interesting is, Anita, you brought up the tax implications on gross profit, not net profit, which is crazy income for the state. What is your guys' thoughts as far as you kind of extrapolated Colorado, a very small percentage compared to California, Jason? What's your thoughts on can this get us out of the California hole? Well, assuming politicians don't spend it all, but can it get us out of the spending hole? Or what's your thoughts as far as implications there comparatively to Colorado as well, seeing what their tax base is?
I think their state spending is $135 billion. We ran around $6.5 billion state surplus this year. I mean, I don't know. I mean, the taxes are a lot. Everyone's taxing the heck out of this thing. Obviously, sales tax, then you've got excise tax, then you've got taxes that go up and down the food chain from cultivation. We mentioned about wet weight before. We specialize in freezing. We don't sell flour. we actually freeze our cannabis and then take it, the frozen product, and use that to, we do solvent extraction and ice core ash, which is non-solvent. We use BHO as the CO2, but you get taxed every which way in this business. So I don't really know what the forecast is for it, but I also don't think it's going to be a 10-year perspective.
Well, I would just say that from a valuation perspective, as soon as we see reform in 280E, valuation is going to go dramatically higher because the business is going to get done. Their normal operating expenses, that is on the retail level, on the producer processor and manufacturer level. Basically 280E limits you to deducting cost of goods sold, and you can pile a lot more in the cost of goods sold as a manufacturer than you can in the retail store, but it also creates some issues.
It's an output of that. You could sell cocaine, or you have to declare the income, but you can't deduct taking someone out of December.
So as you look to invest in a cannabis business, whether it touches your plant or doesn't touch your plant, but particularly in plant-touching businesses, find out who their CPA is and make sure that they are using a CPA that is very experienced in cannabis and 280E.
Jason, we just decided we're going to do a cocaine panel in June. Can you come back? So the question is the regulation on fertilizers and different grow materials. Anyone have to take that?
So in Colorado, we have to go out and testing. It's another ancillary business is these labs where they go to sign for testing. If it tests positive for certain types of issues, then we would store the product. Others, we can take it back and we can blast it with using a BHO solid-based extraction process. California will have has a requirement. I think it's a 6-month moratorium against it. I think we start having the testing on July 1st. You picture an industry like you go to the store right now. Everything's medical marijuana card. You go to a store on the shelves. That product's not tested. So basically, it's like bathtub gin. You don't know what's in it. You don't know what you're getting. Whatever it says on the label is bullshit. That's going to be another issue in the industry. It's for the migration. This is an issue that the existing gray market growers are going to have as they migrate into the regulated world.
I think what I would add to that is in Washington, in Oregon, there are lists of pesticides that you can and cannot use, additives that you can and cannot use, and I think California is going to follow that same model as it's showing, and there will be lists of things that you can and cannot use if you go to great to consider.
Yeah, right.
So, Jason, I know you mentioned something specific about the difficulty in the financing. I understand the difficulty, especially in financing the operations side, but what about the acquisition side when it comes to the real estate?
All cash. Hard money or all cash? No bank will lend money.
So, if I was to buy an industrial property, not necessarily say specifically it's going to be for cannabis business, why can't I get a bank? Why can't I get bank financing if I'm going to lease it out to say an operator?
Yeah,
So repeat that question real quick.
Yeah, so what happens if you buy a property and then you get a loan on it when you buy it, it's a conventional tenant, and then the next day you go and lease it to a cannabis user? Most lenders will require that you get their approval on the lease. Let's say it doesn't do that. Eventually, if they inspect your property and see a cannabis tenant, they're going to call your loan default. Or they may not. I know lenders in Colorado that haven't done that. For full disclosure, we've got a very small loan on our property up in Oakland. It was a loan that we assumed we bought the property and we told the lender what we were doing. It's a friend of ours. It was a wink nod. They said, look, when you guys start getting your license, you have to pay us off. And we did. Buyer beware is what I would say. Your loan will be called. It could be called. It should be called.
I would also add to that, remember, if you've got a loan on the property, the tenant is paying you with proceeds from the sale of an illegal product. Okay, so now you're bringing the proceeds from the illegal product and depositing it into the bank. Bank's not going to like that. That's number one. Number two, you're also depositing cash. Okay, you're not depositing checks, you're bringing cash to the bank. We got a call from a building owner who gets paid $30,000 a month in rent. And after 3 months, the bank came to them and said, don't bring me that cash anymore. We don't want it. And he is now taking that $30,000 a month, he's putting it into a safe, and he says, this is useless paper to me. There's only so much you can buy at Best Buy. Right? He goes, this is useless paper. Right? So that's one of the things that you're going to face with bank financing.
Yeah, well,
On the hard money side, on the hard money side, how much risk is there for, let's say I'm the lender and someone's using the property for lenders? The feds come in and seize the property as illegal, and as a lender, I'm like,
Well, clearly, yeah, let me repeat the question. That is, how much risk is there to the building owner of asset forfeiture? But the feds coming in and seizing the property. You're the lender, right? You're the lender. You're the lender. How much risk is there of asset forfeiture because cannabis is being grown in that property? Clearly, it is a risk, okay? I've not seen any asset forfeiture or seizures in many, many years. All right, I've been in this industry for 7 years. So as a lender, if you're okay with it, the best advice I can give you is you need to have special deed of trust, special lease documents for that particular tenant, dealing with compliance with law, and your best guidance is to go back to making sure they're compliant with state law, and they're not impeding any of the enforcement priorities of the coal now. And if that business is squeaky clean, other than the fact that it's selling cannabis, I think your risk of federal asset seizure, because the DOJ comes in, would be minimal. So it's not zero, but it would be minimal.
They'll get a notice, usually, and they don't comply with the notice in 90 days, then they'll seize it. They're not going to go around just like seizing all.
That's absolutely correct. They're not going to swoop in and seize it. And you have due process issues as well that you'll be going through.
What's the difference between, you talked about how the lenders don't want to take the money in and things like that because of the grow operation or the cannabis industry there. What's the difference between when you're talking about where they can deposit money in the bank as long as they flag it in different instances versus, a lender loaning on a property and, versus the loan side of things? Wouldn't the bank be either taking money or lending the money on the other side? From the federal compliance, I would think it's an issue on both sides, right? So how are they getting around it from the deposit side, where they're just flagging it based on activity or something versus the lending piece?
I own a cash business and they're flagging constantly. Not flagging, they go through backdoor channels to the bank 2 times a month at least for every one of my accounts. So they're for home, and I asked the bank, why does the government go to my account every 2 weeks and say it's a homeland security? Anytime you deposit cash, a lot of margin comes in, always
Okay.
They actually if you really want to. Even if you're a full legal business, nothing will change.
I'm interested in the types of industry investments for individuals and companies. For instance, if you invest in a type of business,
So you're saying if you have a security clearance for your job or something like that, and you want to invest in the cannabis business or those types of things, what implications could that have on your job or as an investor?
and then for what is implications, which types of investments?
So let me make
That's completely out of my area of expertise as well. That's really, it's a government contract issue, a government security clearance issue. I can't imagine it would be good.
I'd say just ancillary business. If you really want to be in the industry somehow, an ancillary business, something that does not touch the plant in any way. Right.
But even on the real estate, that's getting closer. That's a lot closer to the business than a POS provider, or a software provider or something like that, that is only getting paid with cannabis money. And the other thing on the real estate side is make sure that if you're doing a real estate, if you're owning a building and leasing to cannabis businesses, that you don't take a percentage rent. Because that makes you look a little bit more like a profit interest, like an owner, etc. So in this industry, it's a good idea to stay with the percentage rent.
And I think that leads to a good question, which is, if you're actually going through and, investing in like a syndication or something like that for this, what kind of, is there any legal liability? Not, financial liability is obvious because the Fed's can come in and take the property or close it down or whatever, but is there a legal liability from an investor side that's investing passively in an opportunity like this federally?
I don't know that not, you're a couple of steps removed at that point, so I think it's more financial. I can't imagine the DOJ having the resources to go after the investments. Some of their funders, they may go after the fund, right? And then people put the fund together, but I can't imagine legal investors.
Okay. And Jason, do you have any comments on this as well as possibly how we get around securities issues with the SEC and things like that for syndicating?
No. Cannabis is a federally legal. Anything related to cannabis is federally legal. So, conspiracy to have a conversation. I tell people, these are rats.
Thank God David Coe is running this meeting.
All of a sudden, our Facebook Live is exploding.
If you really want to be invested in the cannabis industry because you think it's blooming and exploding all over, the way to do it, if you want to take on really none of the risk of being involved, is to invest in public companies. Now, there are public companies that are Canadian, there are public companies that are U.S. public companies. You can buy their stock. There may already be a fund, an exchange-traded fund.
It's a really good answer, by the way. Your answer is spot on, right? I mean, you've got to state the country. It's federally legal in the country of Canada. You've got, I don't know how many public companies are in Canada right now. That is your answer. Spot on.
And
Anita, I love you dearly.
Yes.
But you're right, Canada, I would stay away from the U.S. Cannabis companies that are publicly traded right now. They're penny stock, they're in the pink sheets. But Canada is, yeah.
right.
Canada is legal federal.
So you can still take a risk. You can. I put in $1,000 and bought 5 Canadian and 1 U.S. company. And I look at them every couple of weeks. Sometimes it's double what I paid. Sometimes it's 20% of what I paid. It does this all over the place. If you're going to invest in public stocks, look at the cash that they have. Because a lot of it depends on whether they just got around to financing or they're running dry on their latest round of financing and they may not be able to. Remember when there were dot-coms, so we looked at burn rate, we looked at how much cash they had and how long they could operate with what they have left. That's what I would look at when I do look at if I'm looking publicly traded cannabis.
Question here, the one here.
Somebody you were asking about how they're in the cannabis companies without a lot of risk and the contracts and everything. Much of this is maybe CBD, that end of the spectrum, or maybe the industrial hemp, the industrial hemp farmers.
So, Leah, I know we talked a little bit about that. Can you kind of explain the difference for those that may not understand?
Okay, there are just the basics of cannabis. There are maybe 100. They are not really sure because we haven't been able to really test cannabis on a broad scale. But call it 100 different cannabinoids. There are components of cannabis. There's one that makes people high. That's THC. That's a hydrocannabinoid. And that's what makes you high. So the rest of them don't make you high, but they have different effects on the body. There are receptors in our bodies that these cannabinoids attach to, and they do different things. We don't know what all of them are, but that's CBD is one of the cannabinoids, and it's one of the ones that's mentioned over and over again in the Fed's patents from 2003 or 4. And it looks like it has anti-inflammatory properties. It has anticonvulsant properties. It helps people with cancer develop an appetite. It has many, many, many effects on people. And so I agree. I think the CBD and other non-psychoactive components of cannabis are going to be where people are going to make a lot of.
And that's where you see the demand coming long term as well.
I see way more demand there.
I would just add that you can buy, the Stanley brothers who came up with Charlotte's Web, which is the anti-seizure, you can buy CBD oil from Crystal Farm. You buy the Stanley brothers. So they've got a whole rack of different CBD oils. So CBD is definitely a risk-adverse way to go.
Yeah, I was just going to share. Like, so if you're investing in the space as an investor, you've just got to be prepared that it's federally illegal. You have to keep that in mind. I mean, I'll share a story. I invest in ATM machines, and I've been indirectly involved in the industry for years now. They've been in medical marijuana facilities, and even the doctors who actually give out the cards and notices because they're cash-only businesses. And there was one that I invested in where it was licensed, but for whatever reason, it got raided in Long Beach, and when they raid it, they just take everything. So they took the ATM machine, they took the cash was in the machine, so there was $8,000 of cash in the machine, and there was the machine. They held it for a year, even though our investment had nothing to do with the business that was running at the time. And it took about a year to get it back, where it's lucky that they got everything back. And so as an investor, I got switched on the machine, everything was an issue, but for the operator, and also as an investor in general, you have to realize that things can happen. You have to be prepared for that additional level of risk.
If you're looking more risky than Jeff Sessions, right? Like local law enforcement, local law enforcement, California Highway Patrolman wants to pull over a truck that's transporting cannabis down the state, and he thinks something's going bad, even though the driver's got all the proper documentation. What does he do? He puts the driver in handcuffs, takes him in, they don't charge him for the crime. They seize the truck. And meanwhile, your product's lying away in the truck in a police yard somewhere. They come into your facility, they cut down your plants, they can. Local law enforcement is more, I think local law enforcement is more scary to me, and state regulators are also a little scarier to me than this is recording, I think.
So the question, I'm actually focused more on the legislative side of things here. Markets, in my opinion, this one right now is not a viable market. We're looking at around 25% of the jurisdictions within the state that actually have to come online. And with federal policies such as the social equity policy in city of LA, that could be a bottleneck for people who need that. What are we looking at? What kind of advice would you give as far as investing into something that might not happen down the road? For instance, you've got property in the city of LA, people have their licensing, their retail license, but they can't do cultivation, they can't do distribution. So the viability becomes a very big issue for this investment. Thoughts on that and how to make
don't make cannabis in the city of LA. LA is not a manufacturing city. The city of LA is not a manufacturing city, at least in my opinion. You want to go to commerce, you want to go to industries, notwithstanding the fact that their regulations are different. I would, DHS is a big, hub right now, very expensive entry, barrier entry to get in once you're in. It's more affordable, but clearly in the city of LA. You go retail, obviously, and that's going to be this. City of LA is a disaster. So 1,700 stores currently open in the city of LA last count. You can get the information to the City of LA website. If you look at this map, they've got blue dots, purple dots, and green dots. The green and the purple dots are but anyway, the bottom line is 1,500 stores in the city of LA are getting letters from the city attorney's office, from Mike Fleur's office. The landlords are actually getting letters saying if this business isn't shut down, you landlord will be fined $20,000. That's the enforcement mechanism that the city of LA has against the majority of the open stores in the city of LA. Once those stores are shut down, 200 stores roughly will be grandfathered in. They're called pre-ICO, D, whatever. It's a whole other story. Those guys will very stay open. The other 1,500 will close, and then what will happen? That's going to be the mechanism that Kirk Weston and the LA City Council get to have landlords and existing stores to get social equity in place and give them a head start. So look out in LA, those stores will be destroyed. Probably.
Just real quick, market viability is also still an issue. You've got large companies such as FIBI, for instance, that are big too. But down here, the largest market in the state in general, they can no longer do business because they are licensed operators, because you have to be licensed for license. So, I hear you on the LA, but I'm not the state this.
I'm in this business for 10 years. Right now it's a bottleneck in this issue. It's going to get worse before it gets better in my side, in the opposite side of the business. But you can consider what the squeeze in a long term. I'm in this for the long rich pip scheme. It's good. I thought you were doing
I'm on the marketing and advertising side of things. And my research is that it's the biggest demographic for those products that come from women that don't want to smoke that are in these 36 or 50 states. So, yeah, like market viability is always a concern for me, but there's no cost.
Particularly California and the drought and the water rights laws or contracts in California, how do you guys have anything to add about water rights and what?
One of those global warming people. We use surprisingly very good. We're out of indoor, right? We don't do outdoor. We use very good water. We recycle it. We chemicals out of it. I'm not the expert on the ground, but our water usage is very low. Our electricity usage on the other hand is very high.
It's a bigger issue in the Golden Triangle with water rights and runoff and stuff like that. And you've got it in the Emerald Triangle, in Humboldt and Latino area. And it is a big issue. And you've got to be very careful. And that's one of the things that leads into the focus on pesticides and the runoff. So, but it is highly regulated in what you're doing up there and getting your state permit, your state license. You have to demonstrate your water plant and you have the water rights. Back to you.
I want to say I do have a
That's your question?
What kind of recruiting or application process and these are people who are
Stoners.
Hey, you guys drug test?
You drug test. You test negative for
This is like nothing I've ever done in my life. I mean, this is great. I mean,
and I'll tell you why I asked you, because I was this summer, it was one of the biggest problems we had with employees either doing during work or come or before and after. And you can say as much as you guys want that things are getting regulated, but it's not. And my social concern is that now that it seems to be regulated, the no free checking that facts are saying, and maybe hopefully that's going towards a more medicinal and real, for really true versus just recreational. But from a business perspective, we've grown these and we have employees. What is the application process look like?
Yeah, so first of all, in the state of Colorado, the regulations are insane. So it's like we're in these two states where you've got regulations being drafted as we speak, changing every day, literally, and in Colorado where they're changing every 6 months, but serious regulations. We have strict no on-site consumption policy, strict. We obviously, in Colorado, you have to get a badge for the state to connect. There are law enforcement provisions. It's kind of similar to like getting a badge in Nevada or a casino. So people always ask me, well, are people stealing from you? No, they're not stealing. It's their livelihood. You've got 100 cameras in the facilities. They're being remotely monitored. You've got your trimmers in there, harvesting, taking off the junk off the flower. But they put it in their pocket. Like, is it going to get caught? They're going to get the report. It's the med. They're going to lose their badge. That's the livelihood. We do back and the med background checks. In California, we don't have that yet. So we do background checks, of course. But you also have a lot of relatively minimum wage employees that are doing the framework, your packaging, your cultivation assistants that are making low wage. There's a lot of and there a lot of them are slackers. I'm just going to say it, right? They're not used to a lot of historically backyard growers, legal growers. So we have very strict policies, and it's a oh, of course. Oh, everything. We're as legit as they come. Health benefits. We have HR. We had an issue. I had to intervene. Not even my HR had intervened in an issue where a female employee was suggesting she was being discriminated against for being a woman. You know, it's all the same issues as any business you would have. It's all the same issues. We treat it no different than any. We as regulated. I come from regulated industries. I do a lot of work in affordable housing, affordable housing development, where we do a lot of paperwork. We work with the federal government. We do tax credit. So we love regulation. I love it. It's a roadmap to success in the cannabis industry. This industry will not succeed without regulations.
The second one is now that you guys see, what I saw this last year is every other day a new dispensary open. You will see that, and a lot of them actually real estate owners that I personally know, who maybe a few years ago would never touch a cannabis recreational constantly coming into their space, but now they're loving it. So you will see them closing out, especially because there's really no regulation on, no one's really looking at the effects of the foods that they're consuming. Especially with the edibles, no one knows what's in them.
That's changing problem, and it, you know, edibles is a whole, it's a small subset of the industry. That's the housing industry. Edibles is predominantly growing flower. The industry is in Colorado, and I can't speak that. I know Washington's the same. You know what's in it. I mean, you get lab tested, and there's literally like pieces of paper that you can see at the stores that show what's in this.
The labeling requirements are quite significant. In Washington, Oregon, and Colorado, the packaging requirements, the child food packaging requirements, and in California as well, those labeling requirements are all going into place. And something in California that folks should be aware of is you've got to put a top 65 label on your cannabis as well, because if you're dealing with flower, it's certainly got chemicals that you know about safe cancer. And on the HR point, just to do my lawyer hat on for a second. Right now, the state of the law, from an HR perspective, is that you can have a policy that if somebody tests positive for THC, you know, you can terminate their employment. You can also have policies that say, you know, no cannabis use during business hours. If you're under the influence during business hours, this grounds for discharge. The interesting thing that's coming on the medicinal side is the Americans with Disability Act. And is an employee their ability to use cannabis a reasonable accommodation by the employer? And that's still an unsettled principle of state laws right now, that cannabis is not a reasonable accommodation. Yeah. I don't know if that's what I know. You can't ask what they used to make, you know, salary like that kind of thing. But it's coming, and it'll be interesting to see what happens with respect to the APA and medicinal use of cannabis.
I can't tell you how many times I hear from someone that says, my cannabinoid system requires me to be smoking this strain during the day, or else I can't work. I don't even know how to respond to that. I just go away, do it somewhere else. I can't, you know, not walking my eyes. It's ridiculous.
Yeah, so basically, this is going to be a question about another form of investing that's on the compliance side of it. So let's talk about some of the other. We talked about the real estate. Clearly, you're investing in part of a business that is distributing it and growing it. You're involved in the financial side. What are some of the other? Maybe we need this question for you. What are some of the other aspects of this industry where you see investor money?
Well, you talked about ancillary testing. They actually test. I mean, ancillary to me are the companies that make the bombs. They make the machines. They don't touch the plant at all, ever. Testing labs are going to be a great part of the industry. But they do touch the plant. If the plant comes through and they test it, and then their needs go out and they do their report. But they will. That's a part of the industry that I would invest in. One of the things that I look at when evaluating a cannabis company are the people who own the business and the people who run the business. I want the people who own the business and run the business to, if it's the CFO of the company, I want that CFO to have the experience and qualifications to be a CFO, not somebody who's just stepped into this position themselves. If the people, if I were, for instance, if I held real estate and I wanted a tenant to come in and operate in my business, I want to meet the people who own the business, who run the business. It's very important to interview these people and see what their backgrounds are, because you don't want people who are going to steal, cheat, smoke in the bathroom. You want people who are going to do this right and not jeopardize your business, your license, your real estate.
That's a major implication, right, with regard to real estate as a whole. I mean, we're talking just about the entire industry, not just, we talked about a little bit about the commercial aspect of things. And I know, at least from what I'm hearing, is a lot of people are, snatching up, manufacturing sites and warehousing spaces and things like that for this industry. What's your guys' thoughts on the implications with the residential industry? One of the things, for example, that brought up to me was, in your residential leases, it specifically outlined you can't do anything illegal with the property. And so if you're not specifying between federal and state, you may have an issue with eviction and that type of thing. But have you guys seen any implications on the residential aspect of this?
I think the only thing one is I think a residential grow is too small. It's never going to be cost effective. You just can't grow enough in that small space to make it rational. And then it's all indoors. So I would think that there'd be that kind of impact on residential real estate. I think what is an impact is that if a cannabis dispensary or retail is available on a street that's bordered by residential, that residential value may go down because people don't want to buy where there's a dispensary. So there are a lot of regulations about how much approval you need to get from the neighborhood. Is the neighborhood going to object to having a cannabis company in your real property? I think you need to know that. You need to go, knock on doors, ask. Are you going to be okay if I rent my real estate, my commercial real estate, to a medical dispensary? If they don't want it there, I wouldn't put it there.
Question back?
If you know some of these individuals, have them call me immediately. I mean that with the utmost sincerity in the city of Los Angeles, because this is tethering process, right? So it's an Oakland where we tethered with these individuals, and that's the problem. It's them.
The biggest problem with that social equity program, in my opinion, is that you get an owner of a business who doesn't know how to be an owner of a business. I think that's a big problem.
Right, so that's what we did in Oakland, is we did what's called incubating. So we work with them, we manage the business. I own 50% of their business, right? I put them in business, I can give them 1,000 square feet in my facility. I have 2 guys, because I need 4 licenses. So we did 2 licenses, cultivation and extraction, where my group owns 100%. And then we have 2 licenses. We chose distribution and retail delivery. And that is, 50%, and our social justice partner owns 50% of those. And we manage that business. We're allowed to manage it with them, and we get a monthly guarantee stipend. We'll be successful, but we're ensuring that business.
I think this is for Jason. I know you mentioned that I guess LA is troublesome. But what about these like little cities like you said, industry, commerce, and like Lakewood, Park, where they have some like I guess a lottery where they're only using couple. I guess they're only planning to open couple
limited licenses.
Limited license, but the lottery is that you put your money in and it's not even for sure that you're gonna get it. So Can you elaborate on that? How
Yeah,
they
we
work?
looked at some of those, like we looked at some of those cities, and we asked because I didn't wanna, I was looking to get value out of it, it was a more favorable environment, where we do get a license, where we put those much higher life probability. So, I personally passed on those, but I do know guys that have gotten, have gotten licenses in those cities, and, it's real.
And do they have to own the real estate, before the?
Good question. So that depends. So a lot of people option real estate. If you get the option for a long enough period of time, others speculated in they would go off. There was also front runners, a lot of front running going on where you had people that were, with the Boys Club of these cities, and they were these council guys, and they knew they were going to get a license on their land, so they would buy it. It just every day, it just depends. I personally like cities where it's easier, that it's a clearer path. That's just me.
Right, I mean, that's what, I don't know if I heard it correctly. So in other words, the city of LA wants the business owners to be like kind of ridiculous and.
Yeah, socially hostile, which is great, by the way, but it's the way the world is now. That's good. That's good. It's third party. You get test yourself.
You need a state license to be a lab. You need a state cannabis testing license. And they're going to test for pesticides. They're going to test for mold. They're going to test CBD and THC content, etc.
Right now, in California, that's not in place. It's going to be in place within 6 months.
But the growers are also very much focused on quality control as they grow. Because you can see mold. If there's mold, you're in trouble, you may have to destroy your whole crop. So it starts at the very first level. The growers are looking for parasites, they're looking for mold. And they'll do all of that. And they're very, very careful. Because if that gets into a grow room, you have to just tear it out and start over again.
It's guys in white lab coats, and rubber gloves. When you go through the grow rooms, and do not touch. One guy can touch the plants, but even though it's going through there, you should not be touching the plants. So it's very sterile. I'm sure you're that way.
They let me touch.
Question.
I represent the Spencer and what is if we're only doing the we're not having actual.
You're breaking the law.
But we have an actual space though.
There's no delivery license. There's no legal method of delivery in the city of LA. In the city of LA.
LA County.
LA County has no cannabis regulations whatsoever.
Okay. That's the other aspect.
By the way, I'm not judging either, right? And everyone, people are doing it like crazy. I mean, you're just, you're operating under.
But you either do delivery or storage function or both. But if you're only delivery, so to speak, is there a size requirement for an actual space? Or
well, again, in the city and county of LA, there's no legal, there is that doesn't there's no licenses for that yet. There was no sign. And in the city of LA, I have 2 spaces earmarked for this. As soon as I can apply for a license, I plan on doing it. And we go 1,000 square feet. There's no size requirement.
yeah, you started.
Well, in the state of California, delivery is legal. I think it's the only state in the country where you can actually, where delivery, you can actually deliver. I'm pretty sure it's in the state. They just have, so it's just the city of LA hasn't issued those licenses yet. So weed maps, I don't really think you can order weed maps.
You can't order weed maps.
That's what I mean.
There's Ease, there's Baker, there's a number of platforms out there that are focusing on delivery. You cannot do that illegally in the city of Los Angeles, but you can, for the state, get a delivery license. But remember, prerequisite to getting your state license is having a local license, a local permit from whatever your local municipality is. So if it's prohibited by your local municipality, you're out, you're done. You can't get the state license. The local permit is a prerequisite to the state.
But also you have to like draw a serious line in the sand. So as of 1/1/18, the rules have changed. Before that, there was regulations, there was licenses. So I don't know. No one, you ask one attorney one thing, and another thing, and you know, let's say these are the things you can do to protect yourself. There's nothing that's foolproof, but so all of those old regulations are phasing out with some grace periods for the next 6 months or so. But it's a whole new game.
So does that mean like basically all these different dispensaries in all of these, you know, different cities that have not come out with a stance on it yet, or even, you know, thought about issuing a local permit, they're all operating illegally then right now?
Not necessarily. So how it works is you apply to the state then says, okay, I want to go all carpentry, and if the city of Carpentry doesn't have a regulation or a law, they're still going to call the city of Carpentry, and the city of Carpentry has 10 days to say, yeah, this is not a legal operation, or they can say this is legal, or they can say nothing. The city goes and they say nothing, and nothing is good. After 10 days, the state presumes you're legal. So it's just a hodgepodge of rules that I don't.
Okay. And then, you know, from the standpoint of, you know, insurance and things like that, you know, we've had specialty insurance programs for new things like, you know, short-term rentals and that type of thing that come out with, you know, different risks associated with it. And if the city says it's illegal or something like that, then you know, an insurance company has an out to say they're not paying because it's a illegal activity or something along those lines. What's your take on the insurance implications when you're trying to insure, you know, your building for something like that when, you know, the federal issues may come into play? Have you guys talked to your insurance agents about that or anything like that, or had any experience with that aspect? It's kind of a gray area.
Well, there are a number of companies out there that are writing insurance, for example, crop insurance, you know, and liability insurance and that kind of thing. So there are businesses out there that are writing, or insurance carriers out there that are writing insurance, for example, on the real estate side, for the building that
Yes,
familiar with. I'm not sure you've got insurance for your building.
Yes, on the operating business side, the coverage is not great. So what we do is we're in a fortunate position where we don't get business on real estate. So a lot of our personal property equipment, FF&E, our build out is insured through the real estate. So yeah, we've had no issues there. And full disclosure as well.
And due to the lack of banking things that we, you know, the availability of banking and that type of thing, have you seen any strides come out with regard to people utilizing cryptocurrency and that type of thing to trade? You know, it's this type of product. I mean, it's kind of an interesting, you know, with both transitions at the same time happening. So it's kind of, have you guys seen anything like that happening where people are trading this via cryptocurrency?
There are a number of companies out there that are trying to use cryptocurrency, both on the B2C standpoint. I haven't seen anybody use cryptocurrency on the B2B standpoint yet. But B2C, and our advice is to stay away from cryptocurrency. We're not basically to begin with. It's under student involved in that already. So we think it's a very bad idea.
Would you go wrong with buying weed with Bitcoin? Would you go wrong?
So what could go wrong? I think that's the point. You don't need to get around the banking regulations. Okay, we don't get around the banking regulations. We comply with what's out there. Okay. At the end of the day, we're a compliance company with what we want. And so, and as I mentioned earlier, what's out there from a regulatory standpoint is the co-amount, which has been rescinded, but the principles still apply. And the FinCEN guidance, which is instructions from FinCEN to financial institutions regarding what they need to be doing in the banking industry. Now, many banks are still reluctant to do it because it's illegal federally. They're very much afraid of the FDIC more than the DOJ. And so they don't want to get into this industry yet. But there are lots and lots of banks, I think 300-400 banks and credit unions in the U.S. that are banking this industry. And those numbers come from the Department of Treasury because Because they look at how many people in charge profile, like how many different institutions. In Washington State right now, there are 6 financial institutions banking the industry at least, and 95% of the cannabis businesses in Washington are banked. In Colorado, it's very similar. It's a little bit less, but there are a number of banks and financial institutions in Colorado that are banking this industry. We talked before, you have a bank in Colorado. We have a credit union in Colorado that is banking us as paper, and both those institutions are banking lots of cannabis business. And we think that's going to happen here in California. Obviously, California, unlike Washington, you need a whole lot more than 6. And so that is a problem. I don't know if any of you saw the report that Treasurer Chung put out with his cannabis banking working group about what to do in the industry, but it is a huge issue here. Banks are still reluctant, at least openly, to start banking in this industry. We're in conversations right now with a number of banks and financial institutions in California to start banking us and banking our clients in the state. So it's coming, but it's very difficult. And the workarounds that are out there right now, which are truly workarounds, is they have a management company. The management company gets the bank account, doesn't tell the bank really what they're doing, where the cash is coming from. The bank finds out, they get shut down, they go to the next bank and do the same thing. So we've seen a lot of that type of situation here now. But what we got to do.
So you guys mentioned Big Pharma earlier, and so far it seems like most of the people in the space are guys like private entities. Are you starting to see institutional money coming into this? Are there institutional companies that are starting to invest in this space?
I'm not seeing big institutional investors coming in. There are groups like RQ, I'm sure you're familiar with RQ, which gathers investors together, and they have cannabis companies come and pitch to them. So if you're a member of RQ, you can sit in a room and cannabis companies will come and pitch, and then you can choose to invest with that company or other companies. So I'm seeing that, but I'm not seeing big institutions.
And what we've seen is a number of groups putting together $30, $50, $100 million funds, and then those funds are going out and investing in different cannabis businesses, both plant touching and non-plant touching, to spread their risk. So there are funds out there that folks have put together to make those investments.
Are those funds structured like a typical real estate fund? You have a PPM, an operating agreement, Series A, Series B? Like, is it just a typical fund, or are there different components because of the cannabis?
Well, I've not put together one of those funds, so I don't know exactly how the fund is structured. But when they go out and make their investments, it's like PPG or something like that, as they're evaluating their investment and what stage the business is in to decide, Series A, Series B, Series C, etc.
Yeah, question here, and then we'll report back. Okay. Taxation, good question. So this is cash. How's the reporting?
Good question. So it's cash. How much is there, misreporting of funds? So not telling the investors what your real numbers are? Yeah, well, that's pretty dangerous. I would recommend doing that.
Sure. So on my side of the business, where there's regulations, so in the state of Colorado, we'll see this out track. So there's no amount, like there's no fact, so we literally track our plants, their life cycle up, and then the product in sale, and then the money coming in. We have a bank for the bank that literally sends and we know the companies like garbage truck, the Brinks truck that comes from us, so they put the money brings to the bank. We report taxes. So to steal from an investor, I would have to, they can easily, and this is such a highly regulated industry that it would be easy to find out. You don't want to steal in this business because there's too many ways to get caught in the regulated. Unregulated, cool.
And I would add that in like Washington as well, there's the same seed-to-sale traceability system where every plant gets, and every bit of marijuana gets traced all the way from the clone to the seed through the retail sales to the customer. And in Washington, that information, your sales, both at the grower, cultivator, producer, processor level, and the retail level, are reported to the state. And you can go on the LCB, Liquor Cannabis Board website in Washington, and look up any cannabis business, and you'll know exactly what their sales were for that month. You know, and then you can then correlate that to their bank deposits, you know, and what they're reporting and their taxes, and see if there's if there's a discrepancy. If there's discrepancy, they got a lot bigger problem than their investors.
You hear every once in a while about a raid, federal government or state government comes in and raids a cannabis business dispensary and shuts it down. From what I understand, most of those, if you look carefully, most of those raids I back to, they didn't pay their taxes, or they filed a tax return, and then the next year they didn't, and then the next year they filed a tax return. You do strange stuff like that with your numbers, in particular paying your taxes, and somebody's going to look at you and shut you down.
So I think from an investment perspective, the bigger risk if you're investing in a plant touching business is their compliance. The compliance with state law. And we counsel everybody that every cannabis business should appoint a compliance officer. They should have written compliance policies and procedures in place, and that compliance officer should have real authority to issue warnings, to discharge employees, to whatever they need, but make sure that the business has a chief compliance officer whose job it is to ensure that business is operating in compliance with state law and not getting any enforcement by
Are there currently inspections of facilities, like restaurants?
In regulated states there are heavy duty stuff. You know, we had in Colorado 6 months ago, we had someone from the marijuana enforcement division said we want to look at the audits. We were supposed to keep backups for either 30 or 45 days. We missed it by like 5 days because we had an issue on camera. Burn through digital, to make any site. So it was a correctable offense, right? But they come in, look at our video, look at our tapes. California not yet. I don't know anything that's didn't come through. Building department, certain fire department,
You'll also have sometimes your bank looking at the inspections. We at Pt2 in Washington, we go 4 times a year. We do an on-site inspection of the business. So inspections are a large part of it. And for the banks doing the inspections or us or a third-party inspection company is to catch those violations before the regulator comes in and catches those violations. The corollary, the analogy is an ocean inspection, or an FDA. You've got food safety issues in a food manufacturer. They've got compliance people. They do their own inspections and checks so that the business catches those before OSHA comes in or FDA or other agency comes in to check it.
What's your guys' thoughts on, because of the additional regulation that's coming, it's going to look like Colorado or something similar, or even more overreaching than that, to that degree. What's your guys' thoughts on how much that regulation is going to stumble up the smaller operator or stop the smaller operator from big time doing it? I don't know how small. I mean, maybe the 3-man shop can do a very small business, but I don't see how the middle guys can do this business. I mean, any level of scale, it's got to be big. And the overheads and paperwork, I don't know how small that is. It's not a big market business. In fact, we're not everybody.
Yeah, I had a question regarding stock options. Really, you want to try to track the best talent. Part of that is obviously like so you do 409A valuations?
Yes, we do 409A valuations, which is valuing the stock option. Somebody gives you the right to buy in or an option to buy stock, and you need to know the value of that. And you need to report it once a year, or any time the stock option is being offered, what's the value of that option at the time that it's granted.
Gotcha.
Okay, it is 9 o'clock on the nose, and I think we can keep talking and asking questions for hours. So we're going to go ahead and freeze everything here. First of all, huge round of applause. I have to say, this is probably the most attentive. We see here all the time. like everyone's eyes have been front and center the whole time. It's been pretty amazing. So thank you guys for being a great audience. Thank you guys. This was a fantastic panel.
I was just going to say one final word of advice is don't go and smoke a bowl and then analyze your investment.
So before you run, next month we're going to be doing a panel on Airbnb, not quite as controversial, but depending on the city that you're in. This is a hotbed issue, so we'd love to see you back next month. Basically, as soon as you leave here, there's a door right behind me over here that if you walk downstairs, you can walk around the back to North Italia. They're probably putting the food on the table right now. Head over there, we'll all be there. Thank you for coming, and we'll see you next month.